everybody, and welcome back to the Dash Trader Newsroom. What is the impact of the big, beautiful bill? Should we sell in May and go away this year? We do this every single year. We talk about the old sell in May and go away phenomenon. Is this year the year that it's going to actually happen? My name is Michael DeJoy. I'm the Director of Educational Services here at Dash Trader, joined by my co-host, Jill Molandrino, global markets reporter from Nasdaq. Jill, how are you?
Good, doing well. No shortage of news.
No shortage of news. We have already kind of, started to feel the impact of the President Trump's one big, beautiful bill. I always kind of feel silly even saying it a little bit. But what is the current state of the tariffs? I mean, we know that there has kind of been a settled deal with the U.S.'s closest ally, which is the U.K. at 10%. China has about 70 more days of its 90-day extension at 30%. The EU is currently also been delayed once again, and that the 50% tariffs are not supposed to start until after July 6th, but that might change again. Where are we at, Jill? Just tell us, try to make heads and tails of this because it really changes day by day.
It really does change. And I don't even think so with the big, beautiful bill, I think the issue is here. We knew that the tax, for the most part, the tax cuts, there was not going to be much of a change there, right? I think the larger issue is, Trump did not run on a platform advocating to add, another 3 trillion to the deficit. And I think, we kind of look at the Fed and what its policy is going to be, but I think it's our fiscal policy that's a bigger impact on the markets. It's unsustainable for us to service this kind of debt. So it's going to, you're seeing hawks, in the GOP who are not in favor of this. And I think it's, adding to the deficit is not what I don't think anybody wanted. And it's been so erratic, and the execution of this is what's really challenging for the markets. And when we think about the current state of the tariffs, I mean, what you have in this presentation here, like it's outdated. And would you make this just this morning or this afternoon?
Yeah.
I think the bigger issue is the USITC that and that's a whole legal conversation, how they blocked the tariffs overall that President not Bush, Trump wanted to enact, and that the ruling was that he overstepped on Wednesday last night when he invoked the International Emergency Economic Powers Act. And initially the ruling was a big setback. These are such erratic trade policies, and even with that last night, when when it was stayed, even if the trade wars weren't over, let's put it like that. And as we're talking right now, or a couple of minutes ago, a federal appeals court, because you knew the administration was going to appeal it, temporarily paused the lower court's ruling that it struck down most of Trump's tariffs.
Mm-hmm.
So granting the administration's emergency request. So that could be appealed, right? And it could escalate to the Supreme Court if it's denied. And that's assuming that the Supreme Court takes the case. So not only are we in this, uncertain tariff environment, now we are dealing with complex, intricate, constitutional law that dates back to the 1700s, and there's a number of statutes that have evolved since then and have been codified and so forth. So the market is going to depend on how this is interpreted. Everyone kind of becomes an expert on social media, that they're constitutional experts, and this is the way it's going to work. But at the end of the day, the tariff thing isn't over. And so on your next slide, when you're asking sell in May and go away, I think the only thing that, oops, I jumped ahead. I'm sorry.
No problem. I'll jump ahead.
But we'll get back to it in a minute. But when you say sell in May and go away, who knows? But the one thing that we do know is there is an expectation for volatility as the tariff situation has not been resolved, and it doesn't appear to be at any time. So now you have a constitutional crisis on top of what's been erratic trade policy and
Mhm.
certainly lack of execution.
Got it. No, definitely. This, it's definitely a time of confusion for sure. The market so far has not really reacted to it. It's back to its all-time highs. Um, the price of gold, is also near its all-time high. Bitcoin, Ethereum, digital assets continue to climb higher. The one thing I could just say is that if the deficit spending continues, that is very generally bad for the US dollar. It weakens the US dollar in which, stocks are denominated in. Which I know is a major concern, and it's actually in the opposite direction of what was promised by both Dodge and the administration during its campaigns, that the deficit spending would be reduced.
Mhm.
Um, so on that note, with all this trade tariff confusion, why are the markets just shaking it off at this moment? They don't
Right.
seem to care.
Well, it's interesting. And so there's a couple things here, Mike. When we got that downgrade on our debt, the markets, I mean, I expected that that would be somewhat of a, a volatile reaction. I mean, it didn't
It was a
react the way that I
non-issue.
had expected. And one thing, when we're talking about tariff confusion, I should have been more clear in my explanation earlier. Um, with the appeals court, they didn't rule that it could stay. They put a hold on the lower court's ruling, meaning that it gives time for both sides to present their case to the appeals court.
Hmm.
So it's not like they've ruled on the case or the merits of it. And I think that's an important distinction to make, which lends to the point that we're making that this tariff trade war thing is not over. And it's self-inflicted wounds in a way when, you know, regardless of what side of the aisle you sit on, it's just sloppy execution. And that's why you hear the taco acronym now,
Yeah.
which is it's kind of a big blow. It doesn't it just it's I can't even find the right word for it. We are so much better than this. And anyways, that's where we are. But earnings season, though, I will say that companies, and we've been doing this for 5, 6 years now,
Yeah.
Mike. We
Yep.
said this during COVID that companies adapted well. They executed quite well and were able to adapt. And we saw
Hmm.
the lessons learned with the supply chain as an example. That has been, not everything's being onshored just because Trump is in office. That's something that they were doing even prior to then. So I think companies have learned a lot through their experience with COVID and how quick things can change. And some of them have executed quite well. I think what we need to watch for the next earnings season, and we spoke about this on the show yesterday, is the consumer and employment have both been holding up well. And that's the two biggest parts of our economy and what the Fed focuses on. But even their I can't remember, international travel, I can't remember the acronym right now, predicted that we are going to see a $12.5 billion drop in tourism this year. It's multiple billions. I can't remember the exact number, but from the peak to where we are now, it's a 22.5% drop in tourism. And it's not related to lack of demand or affordability. It is conscious decisions being made about people feeling safe and wanted here in
Coming
the
to the
US.
USA. Yeah.
That's a big difference. Demand and money is different than conscious decisions made. Now, Mike, what makes up nearly 70% of employment? The service sector. So
Mm.
when you think about what's going to happen with earnings, if that plays out, again, it's not about discretionary spend. It's about having the spend in general. If you don't have people coming and there's nothing to service, that
Hmm.
that's what's been holding up the economy.
Wow. That's a very, very big figure to consider. So, I mean, basically, this earnings season, you are 100% correct. I mean, there really wasn't anything. I mean, it seemed like companies did a great job of adapting to all this tariff confusion. There's a little lack of clarity too. I mean, there's certainly, billions of dollars being collected for tariffs. It's still not really clear how much money is actually being collected. What is the benefit of all these tariffs? Meaning, how much actual revenue is the federal government taking in from tariffs since they started in April? We're about a month, almost 2 months into this, and where is that figure of how much money is the government actually taking in from all of this tariff confusion?
But Mike, here's
You,
something else. When you think about the data, and again, our there's I think better sets of data that we can use that are more forward looking than older. However, the thought was that consumers are pulling demand forward. Now think about it just anecdotally. I think it's Hyundai has a commercial saying that,
yep.
we're here for the consumer. We're not touching MSRP till June 2nd or 3rd. Okay,
Hmm.
that's an indication that, there's a reason why they're being specific with that date.
Yeah.
Ford has messaging about specifically built in the US. I think Volkswagen, and I could be wrong, there's another car company, very detailed, and we are here for the American consumer. These are the dates you can expect changes. But I mean, if that can't be telegraphed any more clear than it is, I'm curious to
Hmm.
see if that truly was demand being pulled forward.
Hmm. So basically, what we're saying is that we're not seeing the actual cost impact yet, because on whatever date that they're specifying in these advertisements, that's when the actual tariffs kick in, and that's when they can no longer shield consumers from that additional cost. Is that
I
an
think,
accurate?
it all depends on what
We think so, right? But
well,
that's the
because
whole
you have to,
thing.
when these commercials were made, you just don't make a commercial the night before and it gets, it goes
Yeah,
on air. They've been
yeah.
saying this for a couple of weeks. So they're going with what they knew after Liberation Day, but what was it? April 2nd, just under 2 months where we are now. So the story is very different.
Yeah, it's a
So who
complete
knows?
it's a complete change. I mean, but the question is what does next earnings see? I mean, now we're really, basically rounding out the end of the second quarter. We got one more month in the second quarter. Um, what do we expect in the next earnings season? I mean, because first quarter, like you said, nothing really happened yet. But do we expect the tariff time bomb to appear in the next quarter's earnings, the one that's finishing now?
You know what? I do not know, but
Yeah.
the what I am more curious about is on the economic side of the equation and the impact to the consumer and what happens with jobs. When I read it came out 2 weeks ago, and then last week, 5 or 6 days ago, New York City put out their projections as well and expected a significant decline. I believe it was 9 or 12%. I should have pulled it up, so don't quote me on this. But
Hmm.
when you see consistency with
Hmm.
tourism for reasons not related to demand or affordability, and the biggest component of our employment graph is
Mm.
service, that's concerning. Um,
Yeah.
so there are areas of the market, it is parts of the tech sector, semiconductors as an example, cybersecurity as an example. We're not seeing those investments being cut back, right?
Yeah.
Um,
I mean, we certainly saw that the earnings for semiconductors, I mean, the semiconductor stocks were on fire today, as NVIDIA's earnings were fairly good, and that was indicative of other semiconductors companies. So,
okay.
obviously that hasn't had an impact yet. But then again, there's so many exceptions to the tariffs. It's really hard to make any definitive prediction, right? Like, so
Yeah.
it's like there are so many exceptions, in semiconductors, personal computing, handheld devices. It's hard to really know what the impact of the tariffs will be in the second quarter. I mean, we will have a little bit more of an indication, but it is again, kind of like almost like a phantom menace. I don't even know what
Yeah.
to.
Yeah, which is funny because I mean we've been saying this since COVID, and now that we have more mobility as investors and as traders, it's not as quiet in the summers like it used to be.
No.
Yeah,
Yep.
it
It
if you think about it, we are so as of yesterday 2:30, when I did my last hit of the day, the S&P was up 0.68% from year to date, right?
Yep.
Now, okay, flat in the year. Now, if you look at the activity in between that, it tells a very different story.
Yeah, I mean the chart that we have right up in front of us right now is a roller coaster, and we're at the top of the next peak,
So if you were an
right?
investor and you didn't do anything and your 401k accumulated shares cheaper,
Mm-hmm.
right? If you're a
Yeah.
trader, There's something
Yeah.
for everybody.
Yeah. It's been definitely a wild ride is all I can say as a trader. So Jill, as always, thank you so much for your valuable
Yeah.
input, and till next time.
All right. Thanks, Mike. Take care, guys.
Bye bye, Jill. Thank you
See
so
ya.
much. All right, so here we go. Let's go to the charts. So today's activity has been a roller coaster to say the least. We gapped up on the news that the tariffs had been blocked. And then, of course, there's been a number of workarounds thereafter. We got 6 minutes, 6.5 minutes to the close. Here is the let's just make this a chart here, and let's just bring up the this is NVIDIA. This particular one is NVIDIA. They gapped up on their earnings. They gapped into resistance. Really very far off the lows. NVIDIA had gotten down to 85. It's now at 142. I mean, that is a tremendous move from 85 to 142.50. Let's just look at the QQQ. This is the Nasdaq. Pretty much looks like the chart of NVIDIA coming in some overhead resistance up here, which is really overhead resistance from the beginning of the year and the highs post-election in November. So we have a double top from the November high, the post-Trump victory rally, the secondary post-Trump victory rally, the sell-off running into Liberation Day, and then, of course, the reversal thereafter as the tariffs found exemptions and whatnot, and also delays. SPY, very similar picture to the QQQ. The DIA, the Dow Jones Industrial Average, which you would expect with all the industrial benefits of bringing industry back to the United States. You would think that the industrials would be doing well. They are, but again, they are not doing as well as technology and the broader index, the SPY. NFLX, Netflix finally taking a little bit of a break, but really a straight shot up. Netflix is the one of the Magnificent Seven that just is the most magnificent as of late. The one that's had a little bit of trouble is Google. Lots of questions about Google possibly being split up. Microsoft also has made a tremendous comeback since its excellent earnings report. So Microsoft has done very, very well. It's really back up to an all-time high. Really, Microsoft has been indomitable in a sense. The other one that's been a little sluggish is Apple, really not recovering. Apple did rally from 170 back up to 210. But is actually back down at 199. So Apple not doing quite as well. Google not doing quite as well. NVIDIA recovering fully. Netflix really never faltering. And then of course we have the Tesla, which is finally giving back a little bit of territory, but really recovered very well from its low at 220 and 210 area. So certainly Tesla has made about a 50% retracement from its low. It's bounced up 50% from its high, but also 50% from its low. So it's right there at that key retracement level. So with that being said, I'm just going to try to bring this properly back up. And from current slide, we'll call it a day for market analysis. Certainly gold and Bitcoin. Bitcoin and cryptocurrencies pulling back a little bit, but near their all-time highs. Stay up to date with all things DAS by signing up to our monthly newsletter and emails. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, for your DAS newsroom reminders. And follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. Tune in next time for the latest update on how to interpret the ever-changing trade tariff information. Trade well, everybody. Certainly a fantastic trader's market. Till next time. Bye-bye.